Hello students, today's concept is concept number 3, PUC2 accountancy, admission of a partner, accounting treatment of goodwill, concept number 3. So this is similar to the concept number 2 because in the concept number 2, half of the goodwill amount is withdrawn. In the concept number 3, full amount of goodwill is withdrawn. Okay, let us start. What is the situation? If in the problem OPSR and new partner profit sharing ratio are given. In the question, two informations are relating to the profit sharing ratios. One is OPSR, another one is new partner profit sharing ratio. And new partner bring the cash for goodwill. In the adjustment they will give that you bring the cash for goodwill. And full goodwill amount is withdrawn by the sacrificed old partners. So the question theme is, in the question OPSR and new partner profit sharing ratio is given, and new partner bring the cash for goodwill, and full amount of goodwill is withdrawn by the old partners. Mr. A and Mr. B are partners in a firm, sharing profits and losses in the ratio of 3:2. In this partnership firm, there are two partners. One is Mr. A, another is Mr. B. Their OPSR means old profit sharing ratio is 3:2. Their balance sheet as on 31st/3/2024 was as follow. Was what is there? It is old balance sheet. Balance sheet of Messrs. Mr. A and Mr. B as on 31st/3/2024. Capital and entities amount, assets amount. Capital Mr. A, Mr. B. Assets and cash - bank. On 1/4/2024, they admit Mr. C into the partnership on the following terms. This question is relating to admission of a partner. Now, who are the old partners? Mr. A and Mr. B. What is the OPSR? 3:2. What is the old balance sheet date? 31st/3/2024. The date on which new partner is admitted into the partnership firm on 1/4/2024. Who is a new partner? Mr. C. Number 1. Mr. C should bring in cash rupees 25,000 as his capital and rupees 15,000 goodwill for 1/5 share in the future profit. Now see here, if the new partner bring the cash for goodwill, okay, then goodwill amount is withdrawn by the partners. Show the accounting treatment of goodwill as per AS 26 by preparing the partner's capital account and cash or bank account. Pause the video and note down it. Sorry, let us start. Solution to concept number 3. In case of admission of a partner, to give the accounting treatment of the goodwill, sacrifice ratio is required. So sacrifice ratio is equals to OPSR. Why? If in the question OPSR and new partner profit sharing ratio are given, the OPSR will become the sacrifice ratio. That's why sacrifice ratio is equals to OPSR. Sacrifice ratio is equal to Mr. A ratio Mr. B. Sacrifice ratio is equal to 3:2. 1 minute. Note down this answer. Pause the video and note down it. Working note number 2. Accounting treatment of goodwill as per AS 26. Journal. Draw the format like this. This is journal format. We call it as journal entries. Date, particulars, LF, debit, rupees, credit, rupees. When the new partner bring the cash for goodwill, cash or bank account debit. Step number 1. Cash or bank account debit. If in the question cash is given, you use the cash. If bank is given, use the bank. Cash or bank account debit. Real account debit what comes in. Goodwill amount is rupees 15,000. to Mr. C's capital account. Personal account credit the giver. 15,000. Being cash brought in by Mr. C for his share of goodwill credited to his capital account. Okay. If you want to understand this by applying the American accounting system or accounting equation approach, cash is asset account, increase in the asset, debit. Mr. C's capital account is capital account, increase in the capital, credit, because we are adding this amount, goodwill amount, in the capital account first. Okay. So step number 2. Transfer the goodwill amount from Mr. C's capital account to old sacrificial partner's capital account. When you are transferring the amount from the C's capital account, his capital account is decreased. Okay. So that's why in such a cases, Mr. C's capital account debit rupees 15,000 to Mr. A's capital account. This 15,000 in a sacrifice ratio of 3:2. 15,000 into 3 by 5. 3 belongs to A. 3 plus 2 is 5, both A and B. Rupees 9,000 to Mr. B's capital account. 15,000 into 2 by 5. Sacrifice ratio of 3:2. 6,000. Being cash brought in by Mr. C, credited to old partner's capital account in the sacrifice ratio of 3:2. Okay. If you want to understand it by applying the rules of debit and credit, see, now we are transferring the amount from C's capital account to old sacrificial partner's capital account. When you are transferring the amount from old new partner's capital account, in the first entry, whether it was debited or credited, you check it. It was credited, now it should be debit. So that's why Mr. C's capital account debit. It is a transferring entry to Mr. A's capital account to Mr. B's capital account. These two steps are compulsory when the new partner brings the cash for goodwill. Third step is required only when goodwill amount is withdrawn by the old sacrificial partners. Whether half of the goodwill amount is withdrawn or full goodwill amount is withdrawn. In this case, full goodwill amount is withdrawn. Entry is same, half of the goodwill or full goodwill, but amount will change. Mr. A's capital account debit, personal account debit the receiver. His share of goodwill is 9,000. We are taking this 9,000, you write here. To Mr. B's capital account, this 16,000 here. To cash or bank account, credit what goes out. Okay. If you want to apply the American accounting system or accounting equation approach, when Mr. A and Mr. B withdrew the amount from their capital decrease in the capital, debit. Cash is an asset, decrease in the asset, credit. 15,000. Being full goodwill amount withdrawn by the sacrificial partners. Okay. If you want to listen it once again, just once again you repeat this video and check it. Pause the video and note down. Let us move on to the next step. Now draw the partner's capital account and cash or bank account. This is very important. Are you ready? Pause the video and draw the format. Let us start. When new partner brings the cash for goodwill, what is the journal entry? Cash or bank account debit to new partner capital account. Who is a new partner in this question? Mr. C. So before that, if there is any balance, you write it as two balance brought down. That is not important for us right now because we are focusing on goodwill only. So first entry is cash or bank account debit to Mr. C's capital account. Goodwill amount, working note number 2, step number 1. What is the goodwill amount? 15,000. So in the first step, you have to write in the bank, cash or bank account on the debit side. To C's capital account. In the cash or bank account, you have written on the debit side. Now you write on the credit side of the Mr. C's capital account. That is It is in active ice manner, right? In the passive ice manner, Mr. C's capital account is credited by cash or bank account. Goodwill amount, working note number 2, step number 1, in the C's column 15,000. We have taken this 15,000 from the cash or bank account. Check it. Okay. Once again, you want to check it? Check it. Step number 1 completed. Step number 2 is that transfer this goodwill amount from C's capital account to A's capital account to B's capital account. The journal entry, second step, new partner capital account debit to old sacrifice partner's capital account. That is Mr. C's capital account debit to Mr. A's capital account. Goodwill amount in sacrifice ratio 3:2. WN1 step number 2. Take the calculator, 15,000 into 3 by 5 in the sacrifice ratio. It amounts to rupees 9,000. Again, Mr. C's capital account debit to Mr. B's capital. Sorry. So here it was written as a by, you write it as a to. It was by mistake. I want to change it. 1 minute. I'll change it. Ready? It may be in the previous video also, it may be like this. You just make it as a 2. It is only clear color. Let us move. $6,000. Step number 1 and step number 2 entry are completed. But in the step number 2, contra entry is there because Mr. A, Mr. B and Mr. C, all accounts are in the same format. So now we have to write on the credit side of the Mr. A and Mr. B's column by Mr. C's capital account. Why? Mr. A's capital account is credited by Mr. C's capital account. Mr. B's capital account is credited by Mr. C's capital account. In the combined way, Mr. A and Mr. B's capital accounts are credited by Mr. C's capital account. Right? In the sacrifice ratio of 3:2, WN2, workout number 2, step number 2. Mr. A column 9,000. I have taken it from this. In the B's column 6,000. We have taken it from here. I think everybody understanding it. I am not repeating it because you can repeat it in the video. Let us start. Next, this goodwill amount is withdrawn by the old sacrificed partners. Mr. A's capital account debit, personal account debit the receiver. Mr. B's capital account debit, personal account debit the receiver to cash or bank account. Full goodwill withdrawn. Full goodwill amount withdrawn. WN2 step number 3. In the working note number 2, step number 3. Mr. A 9,000. This 9,000. Okay. Mr. B 6,000. This 6,000. You want to check it? Okay. Now, we have written on the debit side of the capital account. In the capital account, we have written on the debit side cash or bank account. In the cash or bank account, we have to write on the credit side, passive manner. Cash or bank account is credited by Mr. A's capital account. It is 2 times, you make it only 1 time. It's a typing mistake. Full goodwill amount withdrawn. Rupees 6,000. Sorry, rupees A's amount is 9,000. By Mr. B's capital account. Rupees full goodwill amount withdrawn. Amount rupees 6,000. This 6,000. Okay. I think everybody understanding it. So double effect you should give it. Everybody understanding it? If you are understanding it and if you are feeling that it is useful to you, like it. And if you want write any comment, you write it. Subscribe the channel and share to your friends. In the next video, we'll go to this concept number 4.